And we are live, live, live. Good morning, Vernon. And how are you doing, my brother?
I am doing very good. I've had a long night. Literally did not sleep, but it's wonderful.
Vernon, I was listening to the other side of the conversation. I was quite intrigued to hear that there is a commuters' rights association, and it even has a president. I mean, I was
Yes.
listening. Look, the validity of the story is there, but my
Mhm.
goodness, we love positions in this country that will even invent associations just to have a position. I've never heard of a country with a commuters rights association. I'm sure they're there, but I've never
These
heard
things
of
are
it.
essential.
Association. And who voted? Now I want to know who voted for this president. Who held the elections?
I'm,
Okay.
I'm thinking it's maybe commuters or drivers. I don't know, but I was never there.
We've been commuters. I'm sure everyone here is a commuter at some point. I mean, where was the elections? Hmm? Can we please file this at ECZ that we must have a proper election? Because commuters covers everyone, people. Anyone can get on a bus at any time. So can we please have proper elections for that association and proper campaigns and campaign songs so that our
And
musicians can get paid?
because we don't know how the elections were carried out, he is likely to even be overstaying because we don't know how it runs.
Anyway, Vernon, welcome to the second day of financial literacy. Thank you, everyone. It is Tuesday, and we're going to be going through things in a little bit of a different fashion because we're trying out a new format, people. Today, we'll be starting off with the market analysis. Then, I'm going to get you through my daily deep dives and my deep thoughts. I've got three things burning on my mind, actually, four, Vernon, burning on my mind. I'm going to show you something I call the chart of the day, which has to do with financial literacy. And then our career capital concept, we're going to continue with that on how to build career capital, because in order to build wealth, you need to actually save money. But in order to save money, you actually have to make money. So today we're going to be talking about the part of making money, because I'm sure people hate these conversations where they say, save this much, save that much. Like, I don't earn anything. Yes, because you lack career capital. So today we're going to talk about that. How can you convert your skill to cash? Okay, and how you're supposed to be doing that to improve that over a period of time. And then finally, we're going to give you my quote of the day. So you want to tune in for that. It has to do obviously with financial literacy. Hint, hint. Yesterday was the launch of Financial Literacy Week. And Vernon, the statement, the theme of this week is plan your money, plant your future. Okay, that is the reality. So remember, I've given people what I call the four money skills. You have to make money, then you manage money, then you multiply money, then you maintain your money. That's when it becomes wealth. Wealth is something that can be transferred. Riches is something that you have. Wealth is something that can be transferred and sustained through many generations. Many people get rich, but few people, Vernon, get wealthy. That's what even Chris Rock used to say. He's like, there are many of us who are rich, but none of us are wealthy. Because that's what he used to talk about. Say there's a difference between rich and wealthy. But the truth of the matter, the difference, people, between rich and wealthy is rich is money you make when you're awake. Wealth is money you make when you're asleep. Okay, so whatever money you make when you're asleep, that is your wealth. If you're making no money when you're asleep, you are not wealthy. That is the reality. Okay, so if you have to be awake to make it, you're rich. You ain't wealthy. And riches are finished very quickly. All right, so now let's get down to today's market analysis. Vernon, we are continuing that. We are down to another day of the kwacha moving down. Remember that we still have a long way to go because, in the last meeting, I think there was a meeting with the finance minister who even said, look, there is a long way to go before where we found the kwacha. But doesn't mean we
Yeah.
want to get there. But he just said there is a long way to go. That thing was close to 23 the last time. So we are still quite a bit from all-time highs. But we are seeing, Vernon, that yesterday we did see, day 114. We are way beyond halfway through the last record, and we're heading to, well, they may not be at the same level, but they're sure heading for the same record. And if they continue at this rate, if they do get to the same record of 200 days, where will the kwacha possibly be in the next, even just 120 days? We are foreseeing, Vernon, if we continue down this route, at the end of April, at the end of March, we'll be seeing 20.93. It's above the old estimates because there's been some acceleration. But just by the end of July, we're looking at a kwacha that'll probably be at 25 if it continues down this path. if we don't reverse course on it. And this all has to do with the debt negotiations. But the Kwacha did close at 20.6690 in terms of the interbank rate. People, I do report the interbank rate because that's the wholesale rate. Every bank's retail rate is based on this. This is the wholesale selling rate that happens for customers who trade more than $10,000 in transactions. Okay, this is the big Wanas trading. Now, when you're seeing yesterday in terms of the rand, it did close a little bit lower yesterday. The rand is also going through. By the way, we're not just going through this alone. The rand is getting obliterated too. So South Africa, Botswana, there's beatdowns happening on the currencies at the moment. So Southern Africa is taking a whooping. So Zambia, the problem is we're having a compounding issue of our debt negotiations plus the problems in South Africa. Because remember, South Africa controls the flow of capital. But at least the lower rand that's maintained around 1.1192 does show that inflation risks are not too much. Year to date, the rand is up 4.79%, but year to date, the dollar is up 14.21%. So you are seeing massive movements in the markets. Yesterday, we did also see that. The bond market moved up by 0.16%, up 4.79%, reversing some of the losses that happened last week, because remember, it did drop last week. And we did see that in dollars, it is down even worse, 7.87% down year to date because of the compounding effects of the Kwacha. But we have seen that the interest rates are starting to come down a little bit, 24.61 yesterday. That is what we're seeing. So we are seeing a little bit of secondary market bond buying after a huge sell-off that happened last week. So we are continuously moving down this point where the bond market is moving. Now we're also looking at the movement of at the movement of commodities. Copper is up 1.05%. There was fears, obviously, a huge sell-off happened because of the banking crisis, and I will go through that today. But we did also see that oil is down to 72.51. It did drop as low as 70 at one point, even touching 69.9. But it is trading at about 70.51, driven by fears of bank failure, global bank failure right now. We did see gold go up 0.15. Ironically, yesterday, Vernon, gold even touched 2,000 for the first time in 12 months. And US dollar, and this is in US dollars. And remember that gold is what we call the disaster hedge. It is up 8.23% in dollars. It did get up to as high as 10%. Now in Kwacha, gold is up. It's up 0.5% yesterday, but up 23.61% year to date. So it has traded quite strongly. And the cryptocurrencies are also going strong. The reason is this. Remember, Bitcoin was created as a reaction to the failures of the banking system in 2008. So when you start seeing global banks like Credit Suisse, not these regular ones like Silicon Valley Bank, but Credit Suisse start failing, then people start reverting to things like Bitcoin and gold because they're afraid the banking system has got some fragilities in it. And therefore, Credit Suisse, which is a little bit more idiosyncratic, we will talk about where that came from, has got Bitcoin up 89.88% in Kwacha year to date, and Ethereum up 67.44%. People, please remember that cryptocurrency is highly volatile. So whenever you utilize it in your portfolio, use it sparingly. Don't dunk all your money in it thinking you're going to get rich overnight. But if you refuse to listen to me, please don't come back and say I told you. I'm just giving you the figures so that you know what's happening in the wealth insurance part of your portfolio. My advice I always give people is 15% of your portfolio should be sitting in wealth insurance assets, which are gold, crypto, and USD. That is what we use for wealth insurance, meaning that when the broader market is having a slowdown, just like we've been seeing this year, sluggish growth in the bond market and sluggish growth in the stock market, then we can see some sort of reversion back. So that is my option that I wanted to give as many people there. So year to date, obviously, Bitcoin is having a flourishing year, mainly because of bank failures. But I think the biggest one also for me is that gold is up to 23 and even touched 25% in Kwacha year to date returns. So the sluggish growth of your stock market portfolio probably can now be averted by that. So I think that's what you need to try and maybe play off of more than anything. Yesterday, we did see the stock market. The stock market has generally results season, which I will go through in bigger detail tomorrow. Results season has not taken off so strong, but we're up 0.06%. Finally, we're out of the losses, with Chilanga Cement up 0.07% yesterday as the main trader with 100,000 shares traded. Stock market index is up. It was up 0.01% yesterday and up 1.59% on the week, up 4.11% on the month. So this month has been the recovery month, but it's also because we've had mixed reads on results. So I think that's something to read up on. And that, Vernon, gives us our market analysis. With yesterday, the only inflation news that came out was the PPIs coming out of Germany, which did show that inflation is a little bit sticky. We are waiting for the Fed rate decision. This Waiting for the Federal Reserve rate decision coming in this week to kind of guide us on where interest rates are. You did see the ECB raise interest rates in the face of potential bank failure, and you're seeing that the bank failures are starting to rise, but it looks as though the banking system is stepping in. Today, the data that we will be looking out for, it is Independence Day in Namibia and Human Rights Day in South Africa, so it is a holiday there. So not going to get much information there, but we're looking for car data coming out of Italy, car data coming out of Britain, and car data coming out of Germany, so that we can see the auto sector. The growth of the auto sector also affects some of the minerals that we're looking for, and also the EV sector is driving quite a big part of the growth of the auto sector. CPI data is expected to come out of Canada, while the US Red Book will show us if the sales figures are finally going to reverse from the slowdowns that have been going through. And API crude stock is a big thing with Nigeria's interest rate decisions. Expectations is that post-elections, Nigeria is expected to drop interest rates to 16.5% from 17.1%. That'll be a big signal because Nigeria has been fighting record inflation. Will they still not care? And also, we'll be looking for construction data coming out of the European Union. That, Vernon, is got to do with all the market roundup that we have for today. And I'm going to tap into the daily deep dive. And my first daily deep dive for today's Behind the Market, Vernon, has to do with oil prices. Yes, that's a handsome fella right there. But that has to do with oil prices. Uh, hey, man, I may not be pretty, but my mom says I'm handsome. But anyway, it has to do with oil prices and what we expect for the pump price. It is the 21st today. On the 21st is when we start to do the expectations of what the ERB is likely to move oil prices by. And we are seeing that there's potentially no change. They might be some good news that this month we might be spared, mainly because in as much as the kwacha has moved up by 4.31% again, we have seen that global fuel prices or crude prices have come down. So unless the supply chain costs again are a problem, which is what we're hoping for, we're hoping is not the case, because it seems to be that the actual finished products are now going against the trend. So we should be seeing no movement of the oil price, and therefore, if there is that reversion backwards, we should have a friendly fuel price this month. Now, remember, there's some things that are out of this equation. This is based on the ERB's equation, and there are some extra factors such as the movement of finished petrol. But this is the best we can do in terms of what we see for our predictions. This is based on our internal predictions, our internal prediction system. And we are saying that fuel prices are expected to remain flat. Although this is not a consensus read, this is just our statistics that are playing at this. So we might see that transportation inflation might finally get a little bit of gas out of it. And we are also waiting. Remember that there is going to be inflation data coming out at the end of this week. At the end of next week, that's going to dictate. So together, we're going to get the inflation read, and then the next day, we're going to get the pump price on the next Friday. So expectation for the next Friday's pump price is that fuel prices at best will move up by 0.9 thanks to the fact that in as much as the kwacha has weakened, oil prices have come down by 4.09%, mainly due to the banking crisis. Hopefully, the supply chain costs don't have a big effect. The biggest conversation yesterday as well, Vernon, has to do with the central bank, which actually launched financial literacy, talked about financial literacy day launch, or the financial literacy week, launch, where there was the conversation regarding where the central bank governor did actually release his speech. And here's some main points we got into. Obviously, the theme is plan your money, plant your future. That has been the main thing, and that is one thing we do believe in, people. When you make money and you work on making money, and then when you make that money, you don't burn that money. You actually manage it by simply writing a budget, either on an Excel spreadsheet or in a booklet. People just do that, write a budget, and just simply start documenting. I advise everybody to take 10 minutes out of their day every day, just 10 minutes, to just document your transactions and make sure that every week you have filed up how much you spent on everything. You'll be shocked how that information looks. The most of the people, I can tell you, the lack of execution comes from a poor information system. So plan your money, plant your future. So there are 4 steps, remember, people, in the money equation: make money, manage money, multiply money, maintain money. If you do things in that order, you will find that if you work on increasing each of these things, you improve your make money skills, you improve your manage money skills, you improve your multiply money skills, and you improve your maintaining money skills, you are building wealth and changing your family tree. And as long as you make sure you train the next generation to do the same things, as the Bible says, train up your children in the ways of the Lord, and they will not depart from it when they get older. If you train the next generation to do that, you are most likely, Vernon, going to find that it's a very good system to change your lineage by introducing wealth into it. So that is something that we can talk about. Now, the central bank governor did actually tout the financial education strategy, which has actually worked on expanding education from grade 1 to 12 to entrepreneurs to various areas to improve people's financial literacy. Because I think we understood that making all these policies and having a financially illiterate society was not good, because you increase access to credit by, and for the best example I can give you is this, Ben. We've given out student loans to the country, but to a country that doesn't know what a loan is. They know how to get one, but they don't know the implications of a loan. Okay. So then when people start working, they get shocked. Oh my goodness, how much money is getting taken off my amount? Because inside your loan contract is an interest rate. It's there, okay? It's there. But because we are financially literate as a country and we haven't focused on teaching people, when somebody looks at their payslip and they turn around and they say, but we weren't told. No, you were told, but unfortunately, we haven't worked on your literacy so that you understand the implications of the loan you got yourself into. So people are signing, or they're signing student loan contracts they don't understand. Okay, either that or they're lying. And I doubt that many people are lying. They just literally don't understand this. So it is important. If people can't understand student loan contracts, what makes you think they understand bank loan contracts? What makes you think they understand all sorts of financing? They're just looking for money. When they get the money, all of a sudden their brain switches off and then they start doing all sorts of other things. So it's important to make sure that your society is financially educated, also because we don't have a culture that does this. The Jewish community has a strong culture that does this. The Arabic community has a strong culture that financially educates children from the home base. But because unfortunately our home base doesn't do it, you can see that it actually unfortunately affects each generation. So to end the cycle, we need to be deliberate. The other thing he also talked about was that we must also express responsibility for our environment. So it did also now blend into the fact that finance must also support the green agenda to help with green growth. So that is the engine of Zambia's view. So that is kind of the alignment. And as much as, yes, we're also talking about planting our future, it's also where we are investing our money. Is it supporting? So we're trying to also encourage a lot more ESG investment and people to become environmentally conscious of the stocks they invest in, the companies they lend to, the businesses they lend from, the bank lending as well, that it also supports a lot of green activity to incentivize society to that goal. I did tout the fact that financial inclusion has moved up from 37% to 69. Just get that data correct, 69.4%. The only problem I have with this statistic, Vernon, is financial inclusion is all good and well, but it does not capture people's wealth inclusion. My problem I think I have is that we all know how to spend money, but we don't know how to invest it and grow it at any stage. And we don't know what's available to us at each income level. Okay, we only we all taught, okay, let's make money and manage our money, but not many people know how to invest, multiply, and maintain their money. They don't really know how to do this. So this is where the skills have to be increased, because when we start looking at the inclusion statistics of the wealth levels, the wealth assets, Vernon, not a single one of them, be it life insurance, be it investing in the stock market, education, savings plans, all of them. Not a single one of them passes 2%. So 60% of the economy is financially included, but that means that 95% of these people are spenders. Okay, they're just spenders. They're not actually dealing with the savings and investment side of the equation. So there's no wealth creation because they're doing the first two money skills, but they were not working on the second set of money skills, which is multiply and maintaining money, putting money into assets that you can now live off in a passive sense, and then having them being transferable to a generation who can utilize them correctly. So I think this is the battle that we're trying to work on. What before I move on,
Speaking
Vernon?
about, yeah, I was also leaving comment to that. No, yeah, you mentioned of how it's possible for people to at least just take time, at least 10 minutes of their entire schedule on a daily basis, just write down what they want to spend on, what is essentially, and what actually has to be spent
That
on,
they
and how
did
much they
spend on.
spend on it.
Mm, yeah.
Things spent on. But as much as you have something written down, I know my fellow Zambians, when it comes to spending, we will list down even irrelevant things that we spend money on. So I don't know, maybe you might want to clarify on the aspect of what you write down as what you want to spend money on, and you now have an analysis later on of what you have spent money on, if it is essential, if it's relevant, if it's helping you at the end of the day. I know someone will probably want to, attach a bit of saving and investing, but spending is just but okay. But what you spend on. Now some people will take it well, he said, take note of what you spend money on. I don't know, maybe you might want to clarify on what people should spend money on. And later on, when doing an analysis, the, what are some of the objectives that they should be looking forward to after having a look at what they have spent money on?
Well, Vernon, let me just say it to you this way. When you're broke, you know you're broke. You know that you're broke. And if you're chronically broke, you know that this is happening. Okay. But there's an old saying, Vernon, ignorance is bliss. Okay. So if you don't know what's causing the problem, you will just continue along and not realize what's happening. What a budget does, okay, especially when you get into the habit of it, you don't even have to strategize and control yourself because your discipline levels are already weak. As a person, you've been trained to spend money, and you grew up in homes where all you did was spend money. So you were not raised investing. These are stuff you didn't know. Okay. So the first thing that you need to go through is you need to go through the shock process of seeing. So a framework of a budget. And I think we need to start handing out budgets to people, whether it's in Excel or on paper. And there are many templates and tools that you can download just so that you can start to track something. Find the simplest one. Don't overthink it. Just get it and start using it. Okay. And perfect it as you go along. Don't try and find this deluxe budget that has all these analytics. Just find something that tells you the total amount you spent that day on what, in what categories, and how much you made that day. That's it. And then what is the remaining amount? Get to that. So now when you start seeing, Vernon, that you are either at zero every day or in negatives every day, you need to start looking and saying, okay, what's causing this? Okay, because I'm telling you that once you start feeling the pain of chronic brokenness and then you start seeing the image of what's causing it, your instinct is to solve it. Then you start asking the questions. So the only other thing I would say to as many people, Vernon, is learn. What most people need to start doing is learn to detach emotion from the things you spend money on. Okay. Attach emotion from the things you make money from, but learn to detach emotion from the things you spend money on. Because I'm telling you, one of the things that drives you to consistently spend is the emotional value you derive from the products and services you consume. Even something as and that's how people become brand specific, where they're stuck on brands they cannot get out of, simply because of that. So I will tell people that is something you want to try and work on, especially with budgeting. The first step to fixing anything is a budget and sticking to one. It is the first and most critical step. If you do not utilize it, you will not be able to make any adequate changes. You can't save, you can't do anything if you don't know. So the knowledge gives you the power to make the right decisions. Okay, it gives you that. Without that, you are ignorant to your weaknesses. I'm going to stress that point. So a simple budget of your expense, and look at it this way, Vernon. Always look at your revenues. Okay. A budget is not just the amount you're spending. A budget is the revenue that's coming in, the amount of money you're spending, and where you are saving that money. It's in three zones. So if you keep track of this every day, how much did I make today? How much have I spent today? How much have I saved and invested today? And you do that for 10 minutes every single day. You will start to pick up patterns in your behavior. And then you'll start to see, okay, maybe these Friday nights are costing me a bit too much. Maybe these meals I keep grabbing, I thought it was nothing, but now these things are totaling up. These are meals I'm grabbing at lunch every single time instead of bringing my own lunch to work. I can see these are issues here. So these are just some things that you'll start to pick up, and then you'll be able to strategize correctly. But there's an old movie, Usual Suspects. There's a guy named Kaiser Soze at the end, and he says the greatest trick the devil ever pulled is making the world think he doesn't exist. That is what your spending problems do to you. They make you think you don't exist, and that is because you don't budget. Once you budget, you will see where the problems exist. Everyone has different problems, but you will see it. The other things they did talk about, Vernon, and I talked about the fact that we may have inclusion in spending and transacting. There's a lot of transaction service inclusion in financial inclusion, but we don't have wealth inclusion. The wealth products are poorly participated in, with only 0.6% of the country investing in capital markets products, with less than 2% of the country having life insurance. Very low percentages. We have 25% we have 11% of the adult population in formal employment. At least 11% of our adult population is currently in formal employment. So why aren't all 11% of them captured in these statistics for wealth products? Why aren't those formally employed people involved in wealth products? Why aren't the 200,000 employers involved in wealth building themselves? That's a huge potential group of people that if you just captured them, the biggest problem Vernon and I have with the way we address these things. We like these blanket solutions. We like these things where we say everyone must be benefiting from it from day one. The reality of life is you will never release any innovation, intervention, or initiative that benefits and works with everyone at the same time. What these things do is they spread because financial literacy, Vernon, is a culture. Let me show you what I mean. In Zambia, okay, NAPSA is mandatory. Okay, I think we all know this. NAPSA is mandatory. Saving for your retirement is actually mandatory as long as you're working, right? In America, do you know that they don't have mandatory? And do you know that, and in fact, if you're at a workplace, Vernon, some sort of social security scheme or pension is mandatory. You and your employer have to work something out. Do you know that in America it's voluntary? Yet majority of the American population engages in this, while minority of the Zambian population engages in this. Why? Because in America, it's a culture. In Zambia, it's a law. Laws don't move people as much as culture. The things we believe and the way we behave actually has a deeper effect on what we do than the law that is passed. So this is evidence for you. So it's about the culture, and cultures are about parents to children, society, church. This is where culture is built. So if we start to partner with the centers of culture in society, we'll probably see a lot more people engaging in wealth products. The good thing is a lot of these centers are reaching out. People like churches are reaching out to us. They're actually saying, look, we'd like our members to get educated. There's a lot of conversations now that are being had at centers of culture. Parents are getting concerned with their children's financial education. This is positive change. Okay. And if we can continue down this trajectory, I'll show you how it can get better in the chart of the day. But other things that the governor did talk about yesterday was that obviously there are digital interventions. And I want to show you one quick statement by the governor yesterday, which might shake people or might actually affect people. But he talked about the impact of mobile money and everything. But he talked about one interesting thing. And he says, I am happy to inform you that the Bank of Zambia is in the process of rolling out a complaint system using artificial intelligence that shall be available to the public via SMS, WhatsApp, via voice availability features, web chats, and Facebook channels. That's actually quite interesting, especially to the customer service industry. So all you guys are working in customer service, just take a look at this very carefully and think very carefully about the future of your jobs. Think very carefully. The fact that it's being tested at Bank of Zambia, and this system will complement the existing customer complaint channels that will be used currently, and contribute to enhancing the access and distribution of resolution systems, especially for consumer bases in essentially consumers based in the rural areas. I'm waiting to see how this can roll out in rural Zambia, because that should be an interesting situation. Because technology, yes, in as much as it's spreading through Zambia, it takes a bit of time, people, for somebody to get used to the fact that they're talking to a robot or that they're talking to a chatbot. But these things are getting much more lifelike. But it's an interesting change. But I'm telling you that even our electricity provider has currently been working on a chatbot. So a lot of these big government institutions are actually introducing artificial intelligence for customer service. So it's already starting there. So whenever people say, "Oh, this AI stuff is not coming to Zambia," pam, param, here it is. So just think very carefully, people, about the future of work. And when we keep telling you, upgrade your skills because some of these things are coming, but the use of digitized or digital, the use of technology in finances to help it become more accessible and to help with many areas. So that was the speech by the governor yesterday. Now, obviously, the Bank of Zambia speech is off the back, Vernon, of unfortunately the banking crisis globally. We did see news yesterday that Credit Suisse was bought for $3 billion. A bank that was once worth $70 billion, now being bought for $3 billion, has a trillion assets in it, but it has such a poor investors' confidence. Unfortunately, the story of Credit Suisse is one that has a lot of problems. It has been ripe with corruption, ripe with scandal. The issues they've been sued for. At one point, Credit Suisse was banking for cocaine dealers. That is where, unfortunately, this whole thing went. And all the fines and investigations they've been facing. And then came the Archegos mess recently, back in 2020, when a investor bought up a lot of futures and lost $20 billion worth of wealth. It just poof vanished into thin air. So Credit Suisse being bought by UBS, another Swiss bank, which was organized by the state, has unfortunately sent ripples through the financial system that everybody is concerned about the strength of the banking sector, especially when you have such a huge bank that has been taking such horrible losses. But it is not a result of financial tightening. I think this is the good part. Credit Suisse is not a result of financial tightening, it's a result of poor financial reporting. Okay, more than anything. So you shouldn't worry too much. So, what I should tell you about this is when you start seeing the banking system shaking and shivering the way it's doing right now, this is what you do: remain calm. This is why I keep saying to as many people as possible, with the rise of zombie companies and the problems at Credit Suisse and the international banking system, keep your capital local for a bit and allow the problems of the northern hemisphere to ride themselves out. Be it zombie companies in America, zombie companies in Europe, and zombie properties in China, and zombie properties. Now, when I say zombie properties, I don't mean a land where you're going to see like a zombie coming up. I mean, in other words, these are unoccupied properties with mortgages attached to them. So no cash flow coming through them. And then you've also got issues of banking fragility that is starting to work its way through the northern hemisphere. With all these things happening together, you may just want to keep your capital local and keep it in Zambia. And the good thing about Zambia is that our past president may have been a slight blessing in disguise in that he chased away so many foreign investors that the majority of our markets are dominated by local investors. So they're not as sensitive to the international movements. That's why you're seeing that our interest rates don't directly move with everything, but it really is our domestic issues that come to play. So stock your money in the bond market, stock it and put it in the stock market. But what you can do, as the stock market and the bond market have been growing at a little bit of a sluggish pace, is then start to move just about 15%. My recommendation is about 15% of your portfolio be kept in dollars, gold, and you can access gold through online channels. They are there. Dollars, gold, and if you want cryptocurrency or cattle. Okay, this is when you can keep money in animals if you want. But 15% of your wealth should be there in order to circumvent the sluggish growth of the current stock market as it is. So that's just something that to keep away from, because that fragility is real. Credit Suisse is a real player in the banking market. It's Silicon Valley Bank, yes, was significant, but not too big. Credit Suisse is big. That bank has almost got $2 trillion of assets. So when you start having a bank like that having issues, and basically the shareholders lost 70% of their value, that's all those invested firms taking hits, investment funds having write downs in a company that they were supposed to have wealth in. That is a big knock to the banking sector, and it hits confidence in the banking sector. So UBS was supposed to do that, but unfortunately, it had a slightly negative effect. And finally, Vernon, in my thoughts for today, before we get into the chart of the day and the career capital conversation, my thoughts for today, Vernon, is this. One of my thoughts for today is this. I'm going to share something with you which I am concerned about in the conversation of financial literacy. In as much as we want people to help manage their money, I'm going to share with you, Vernon, and I hope many people can see this. This is a letter that we actually picked up from a gentleman who is a gambling addict. So we've removed the names of the company and everything just to protect their anonymity. But this is a response from a gentleman who is a recovering gambling addict. Okay, and he wrote to them, and I'll tell you what he said to them. He said to them, please, can you help me? I have a gambling addiction. So can you please blacklist me from your services? That's what he wrote to them. And this is the response they gave to him back. Thank you for reaching out to us. Kindly note that the rules for closing account are now 30 days. This means that you have to permanently stop logging, not just gambling, Vernon, logging into your account. Okay, you must permanently stop logging into your account because once you attempt to bet, it means the system will start counting again again from the day you placed the bet, so the day you log in. If you fail to manage this, we advise that you change all your betting limits to one kwacha. That way you can be stopped if you're tempted. This is a person who came out and said, please help me. Okay, I don't know how to stop. So can you close my account and can you blacklist me? I need your help. This is a cry for help. Okay, this is somebody struggling with gambling addiction. And unfortunately, the betting companies are so gruesome that they've made it difficult for someone to actually exit. So I think this is time to have a conversation about this country, about some of the laws we have around gambling and what we can do to try and help, because this law we should not allow betting companies to hold someone hostage. A gambling addict means a person does not have the ability to control themselves. Okay, he has
Yeah.
admitted that he's a gambling addict. He has requested help, and your answer cannot be then have the self-control to stay off for 30 days. The person cannot even manage a day without losing their money to you. So this kind of vulture behavior, okay, and my problem with the betting industry is that it targets the poor, the people who should be saving the most. We've made it easier, Vernon, for someone to place a bet than it is for someone to save money. It's impossible to save or to invest a one kwacha, but it's easy to gamble a one kwacha. That's a dangerous
Yeah.
market that we've created. And we have to look at those regulations by saying we've put barriers to people participating in the investment markets where most wealth is built. And then we've opened the gates to people betting and gambling their money away. There must be some sort of legal change that should be addressed in this in order to make this right, because this is actually dealing with a social ill. We can't just only talk about we can't just only talk about what's it called we can't just only talk about drinking without talking about gambling addiction, which is coming up in society. So I think we need to make sure that whatever laws are going in or whatever changes need to be made, the opt out function for somebody who is an admitted addict who's asking you to blacklist them, like the US does, they actually give people the ability to be blacklisted, to ask to request that you blacklist them so that they can go through a detox in that process, should be a right to people. Not that you should be held for 30 days and dare you come in again, that keeping you in the valley of temptation.
And
If
and,
we're
and I
going to
think
talk about
speaking
money.
around, yeah, and speaking around, the aspect of addiction and financial literacy, I think we really do have a problem. Last week, I saw a report in the news of an Airtel money operator, an Airtel money teller, having spent at least over 70,000 of the employer's money betting. That someone to go to such extents,
So
I'm positive.
I don't.
I'm thinking they are addicted. That is just a lot of money. You can how I don't understand really how we get to this point. But you see, for me, it translates that there is quite, so much to be done with regards to really setting boundaries and teaching people really how to handle money, whether yours, whether somebody else's money. Financial literacy has to really be indoctrinated in the Zambian people. We cannot have people waste money like that when they could. I will support this individual, Mutuale. If this person says, I got my employer's money and built a house, I will support them. Not having to bet the whole of a 70,000 kwacha. That's ironic.
No, but that's because we've made it. You see, when you make things easy for people, and they are impulse controls here, when you make things easy, and remember that the majority of betting is done by young men. Okay, that's the ones. It's young men, and betting and drinking a lot go hand in hand. Now, I don't. I know people will say, but we do it for fun. Yet some people do it for fun. But when you're betting 70,000, you're not doing it for fun. You're doing it because you believe you're going to build your wealth there. So I think that's something that we need to start having a conversation about in our country, and we need new laws that prohibit betting companies from failing to get people to opt out, and we need better gambling addiction systems to support it. We take gambling addiction very lightly when the majority of our population is probably suffering with it. We haven't even put the data together in it, but there is a gambling addiction in society, and we normalize it, but we don't understand that that's money not going back to homes. The
Yeah.
people don't understand this. The poorer you are, the higher you need to save. And I know people say, but it's important, but that is the reality. The poorer you are, the higher your savings rates actually need to be. Because that's the only way out. Because your access to capital is always going to be prohibited. Because banking is designed to serve rich people with collateral, with assets, and with cash flow. When you are poor, you have no assets and you have no cash flow to back your invest to back a loan. So your interest rates on your loans are always going to be high. So your best way out of poverty is to save and invest your way out of poverty. Vernon, I'm now going to give you. We're just going to have a brief conversation about the chart of the day. And the chart of the day comes from FinScope 2023, sorry, 2020, which looked at financial health and financial literacy by age and by age mainly. So that's the one I'm going to be looking at. And take a look at this chart here, Vernon, which shows financial health by age. Sorry, let me just share this. Sorry, I think we just lost our little share screen at the moment. But financial literacy by age, according to FinScope 2023, this is the chart of the actual thing itself. And looking at it carefully, take a look at the data on financial literacy by age. You'll notice an interesting trend. The strongest and most financially healthy group of people are actually between the age of 36 to 45. And the younger groups actually have a higher financial health than the older groups. And one of the issues you'll find, Vernon, is that younger people tend to participate in savings and investment more, even with lower income. People in college are looking to try and open accounts. People just in their first jobs are now reaching out because they've learned the lessons of the older generation. So you actually find there is a growing trend that this is actually positive data, seeing that the younger generations are showing themselves to be more financially healthy with poor levels of intergenerational wealth transfer is showing that the younger generations are becoming more astute to investing. With the most financially literate group being between 36 and 45. I can tell you that as a financial advisor, my client group is usually between 25 and 40 and 45. But I do get people in their retirement age. But I can tell you that my best clients are between 35 and 45. That I can tell you. My best clients are sitting between about 35 to 45, some in their 30s, but the majority of them, they've been building wealth and they became very disciplined. And it's actually women, by the way, are actually very strong, but they're guys who are too. I want you to take a look here about financial health by age. Now, if you look at the dark blue part, that represents financial ill health, and the light blue part is financial health. And you'll notice that the more educated someone is, the more financially healthy they are. Obviously, that has to do with their employment status and also their earnings. Remember that a degree holder in Zambia earns an average of 12,000 kwacha a month, while a master's holder earns about 21,000 kwacha versus a diploma holder 7,000 kwacha versus a grade 12 who only earns 12. So the earn money equation is affected by the education of the person. Okay, so that's already one thing. So career capital is also important here. We may not have time to go deeply into that, but just looking also at financial literacy, and I think this is a one that really caught my attention. And I'm going to tell you my biggest chart for the day, which is financial literacy by age. And take a look at this interesting chart. Sorry, financial literacy by age. This is the most interesting chart to me. The younger people are more financially literate than the older people. That is actually a very good sign for the future of the country. So that means the younger people are, the more financially literate they are, and the more interested they are. Also, the younger people have got access to the internet more, so they read more of this stuff. They talk more about it. Older people are more isolated in ways that maybe have not been financially healthy. But the younger population are actually more financially literate than the older population, meaning that they've got access to more tools and access to more financial technology. That's actually quite a point of interest. And finally, Vernon, today I'm going to leave us with my quote of the day after we've actually gone through our chart. These are the two quotes I will share with us people as we close up today on financial literacy. Robert Kiyosaki's famous quote, "We are not taught financial literacy in school. It takes a lot of hard work to change your thinking, okay, and to become financially literate." So it's the way you were, a lot of it has to come up with the way you were raised and the things you are exposing yourself to. The way you were raised, you have no control over that. But the things you expose yourself to are the things that affect your thinking. So if you're surrounded by people who are constantly talking about reckless expenditures of money, and if you're constantly watching videos about make it rain and blow money to the sky, well, Vernon, what do you think you're going to do with your paycheck? You're going to make it rain. You're going to ask people to chop your money. If you're watching P Squared chop my money videos all day, you're going to go to the clubs and chop your money. And then you're going to wonder, where's my money gone? Because you are constantly consuming content that is controlling your thinking, that tells you to burn through your money. Dave Ramsey also says, "I believe that through knowledge and discipline," okay, yes, you can be financially literate. Financial literacy is not the same as financial discipline, people. Those are character issues now. If you have good knowledge, which affects, which is what you're being influenced by, and you have discipline, financial peace is possible for all. And financial peace, Vernon, is in four simple statements. Financial peace is freedom from worrying about your needs. In other words, you don't worry about eating food. You don't worry about this because you've built assets that can take care of it. You're not worried anymore. You've got either flats, you've got bonds, you've got stocks that pay dividends, are paying you for this. So you are not worried about this. So financial peace is freedom from worrying about your needs. The second one is freedom from worrying about the needs of your loved ones. You've paid for your children's education. Everyone in your home is fed. You're fine. Freedom from worrying about this being taken away. You've protected your assets by maybe diversifying them. You've managed it correctly. And finally, Vernon, freedom of your time. That your time is no longer being dictated by an employer or being dictated by something, but you've built this asset base that gives you the freedom to utilize your time to pursue everything. When you are in those four states, you are at peace. So, knowledge, it takes a lot of hard work to do it, Robert Kiyosaki, but you need discipline and knowledge. Without knowledge but discipline, you won't know where to put your money. You'll save it and you just keep it as cash. But without discipline, you'll know where to put it, but you'll never get there because you'll barely save it. Knowledge helps you know what to do with your money. Discipline helps you have money to save so that you can deploy it. We need the two. We need to build financial discipline and financial knowledge. That, Vernon, is the basis of why Money and Fem even exists. And I'll leave it
Before
there.
you go,
Yeah.
in light of financial literacy week and whatnot, something quite practical and something actually that is draining a lot of people's accounts today is the aspect of having to stay in a home that is too expensive and you earn probably thousand, for example. You own a house that costs you 2,500 a month, and you have groceries and you have transportation to go to work. You can more money so you pay your salary to the landlord, and you have a quarter of it to your groceries, and you have clothing. You want to find yourself in the new latest phone. You want to find yourself with these events and activities going on. Is getting yourself in a more expensive home really necessary? Because I see young people rushing out of their parents' home in view of wanting to be responsible and start renting out a house that is costing you half your salary. Your sentiments on that one before
Well,
we call it a morning?
Well, first of all, housing should not exceed 35% of your income. Okay. And Kevin Samuels said, in fact, housing plus utilities should not exceed one third of your income. Otherwise, you will not be able to save. So, Kevin Samuels, the late social media influencer, said, want what you want, but buy what you can afford. Okay. You can desire to move out, but if you have not built the affordability to do it, then you cannot do it. So, what I would advise as many is go and sit down with our Indian Zambian community. You know what you'll find with those guys? You'll learn that they don't move out of their parents' house very quickly. Okay. They actually live in communities. This is how they save money, by the way. They live as communities. They create communes. They'll live on flats together. They'll build together, but they'll live in communities and they'll save a lot of money. Some of them even married will just like get a big house and each of them has a big room. It's a very strange way of living for us, but I understand. But I know that there's a rush to get away. Maybe the first step that many can do, I would advise many of this, is sit down with your folks and sublet an apartment room for them. Sublet your room from them. Okay, sit down with them and say, "This is what I earn. So can I rent my room, or can I invest some of this?" Start by renting that before you rush out to deal with a landlord. That might be your easiest route out. But if you rush straight into I'm going to go and live out there. The cost of housing is expensive. There's a deficit on low cost housing. It is not a market for you. So maybe start with the rental aspect, make an agreement that you are going to sublet from them. That's an opportunity. One, it gives them a little bit of extra income and they're fine with it. They'll appreciate it. And you've got a little bit of your independence by being a contributor. So start as a contributor before a renter.
Okay,
Yeah.
I
So start as
appreciate.
being a
Thank
contributor
you
before you
so
become a
much.
renter. Yeah.
On
Yeah.
all right, thank you
Cheers.
much. Yeah, get all right.